Good evening, all. It's Sunday night. Hope you had a great weekend. Hope you're able to relax. We had an enormous week last week. It was a very unique week, one that is for the books, really. Market broke down and broke below support levels or lows that we haven't seen in many, many years. As a matter of fact, even broke the lows after September 11th. The low over here was 768. The low for last week was 741. The last time we saw these kind of lows was in 97, April of 97. We basically gave back the whole bull market. What does that mean? Is that a disaster? It's a disaster, yes, because it's a self-fulfilling disaster. And this is what really, really ticks me off about this. The media has been drilling people with the fact that this is the worst economic crisis since the Great Depression. The Congress has absolutely done nothing over the past 2 years besides patch holes in a bucket that's leaking. They have done absolutely nothing proactive whatsoever. They've been handing money out to everyone. Now, what happens when the economy is depressed, and not depressed from a financial standpoint, but from an emotional standpoint? When you keep hearing on a daily basis that this is the worst economic situation, worst economic crisis since the Great Depression, you can't get a job. Your money doesn't go that far. Fuel prices are too high. Home prices are plummeting. If you hear that on a daily basis from the media, you become depressed, you crawl up into your cocoon, you stop spending money, everybody stops spending money. People go to the bank and take money out of the bank, and the economy stops. What happens with IndyMac, for example, as someone came out and said, IndyMac, the bank, is going out of business. Go out and take your money out of the bank. Guess what happened? Everybody went out the next day, took all their money out of the bank, and guess what? The bank collapsed. It's a self-fulfilling prophecy. It's the same thing with people saying that this is the worst economic crisis since the Great Depression. Of course, the market will collapse. And the reason why is because nobody's doing anything. If you talk to anyone around you, they'll tell you, listen, I'm not spending any money right now. I want to see what's going on. I want to see if I'm going to keep my job. I want to see what my home is going to go down to. I want to see how my 401k is going to act. I want to see if I can get a better price on a vehicle. I want to see if I can get a better price on a house or better prices at the mall. So I'm saving all my money. I'm not spending anything. And what happens is everything just stops. And the whole economy stops. And that's exactly what's going on right now, is the economy just absolutely stopped. It's the same thing as an airplane that's supported by air all of a sudden hits an air pocket. And the reason why there's an air pocket, there's a lack of support on the airplane, and the airplane just free falls. And that's what you feel. And that's what you feel in your stomach. And that's exactly the kind of feeling that people are getting in their stomach right now, is when the market free falls. Frankly, I think that this is a volleyball or a basketball held underwater. As soon as people start going again, as soon as people start spending money again, as soon as the morale lifts up, as soon as the confidence comes back up, then the economy will come back. I'm really hoping that Barack Obama is going to come out. Well, he's already basically announced his cabinet for next week, but he's supposed to come out with an announcement tomorrow. And when he comes out with an announcement, I hope the market receives it as the solution, or as finally a decision. I'm not saying his decision is right. I'm not saying his decision is wrong. What I'm saying is a decision is better than indecision. More money is lost by indecision than by bad decision. And the reason why is because indecision makes everything stagnant, makes everything just dies down. So that's the reason why the market hit an air pocket, and it lost over 50% of its value. Now, there's two ways to look at this. There's two ways to look at a donut. You can see the donut, or you can see the hole in the donut. What people are seeing right now is they're seeing the hole in the donut. People are crawling up to their cocoon. But if you focus on your trading, if you focus on your investments, if you focus on bettering your own financial wealth, you'll be okay. That's the interesting part about it. The fact that the market went down, it's an asset that went down. They're plain assets. Now, if you decide to invest 100% in stocks and the stocks are going down 50%, yeah, it hurts. But it's your choice to invest in stocks. It can be also your choice to go short on stocks. It's your choice to defend yourself against stocks coming down. Here's what we did last week. This is a weekly chart. I'm going to go into a daily chart. Here's what I talked about last week, and this is the trade I actually gave you last week and the week before that. I told you to basically buy the ETFs that are short the market, or short the ETFs that are long the market. And we named two of them. We named the SSO and the SDS. Now, if you look at the stocks that we traded, for example, there's a CI from $16.92 all the way to the $8 level. We traded Goldman Sachs from the $86 level all the way down to the $47 level. That's a 50% trade. Dish Networks from $14.74 down to the $8.46. BTU from the $25, $24 level down to the $16 level. FST from the $19 level all the way down to the $12 level. CLF all the way from the $20 level, $19 level all the way down to the $15 level, $14 level. AKS, we had AXP, we had Morgan Stanley, we had Joy G all the way from 22 all the way down to, what was it? All the way down to 14. We had XL. XL was absolutely beautiful. It doesn't look like a whole lot on the chart, but we took it from the $5 level all the way to the $4 level. I'm sorry, it was actually a little bit more than that. Let me zoom in a little bit. I'm going to go into a 60-minute chart. From the 540 level all the way down to 390. If you think about it in percentages, it's quite substantial. Here's the two ETFs that I gave you last week. SSO. SSO is long the stock market, and therefore when you short it, you're actually shorting the market. In this one, I'm going to go back to a 60-minute chart so we can see the numbers a little bit better. From 24.11 all the way down to the $18 level. That's a 6-point move on a $24 stock. SDS. We gave you SDS from 104. It went all the way up to the 129 level. No, I'm sorry, a little bit more than that. 133. So from 104 up to 133, 29-point move on a $100 stock. That is absolutely beautiful. And that is seeing the donut. That's actually eating the delicious donut instead of being depressed like everyone else and looking at the hole. Yeah, the market is down, but you know what? You can benefit off of it. You can actually make money off of it. And that's the beautiful part behind it. So what's going to happen next? I don't know. That's the honest truth, and the reason why is because I'm waiting for the next trend. I'm waiting to see what the market is going to do after Barack Obama comes out with his economic team or with his whole cabinet. I think, and this is what the chart says, is that we still have some downside to go, and the reason why is because we've been in a downside. A market is inertia. That means that once set in motion, it tends to stay in motion. I'm not going to call in new trades this week. Not for this newsletter. We're trading on a short-term basis in our swing trading on our nightly newsletter. We're trading on a daily basis, and we're calling some trades right now. But as far as for the longer term right now, I would wait for the market to show the next setup. What we might see is the market bouncing back up to support. If we break above support, forget the short side. If we don't break support, if we stay over here and come down, I'm going to recommend going short again. But we're going to have plenty of time to do that. I'm going to talk to you next weekend about doing that. Our daily newsletter, on the other hand, right now is trading the long side. We're going to catch this bounce up. Once we catch this bounce up, we're going to decide if we're going to go long some more or if we're going to go short some more. So that's our goal right now. Anyway, again, look at the donut. Don't look at the hole. Look at the half glass full, not at the half glass empty. That is your goal. Take control of your own personal wealth. Have a great week, and I'll talk to you next weekend or on a nightly basis if we're part of our swing trading group. Take care.